When the Bitcoin miners turn off and they can do it instantly, and is there a period of time where it becomes, because I don't understand the full commercial relationship between the miners and say the grid or the those who are they're generating the energy, but if you turn around to them and said, "Oh, we need you to turn off for a week," that's a lot of time they're not mining. Is the commercial relationship set up in a way whereby they still are being paid whilst they're turning their machines down, or are they getting just such a low rate when they're on that they can turn off? Like, what's the whole commercial relationship here?
So they're similar to a power generator, right? Is it like there's no kind of ERCOT's not paying them to turn off. It's a signal. The price signal is saying turn off, right? So for the example we shared about before, like a power generator can either produce energy or kind of like backup power, right? And so like in the energy market, like the way that example ERCOT would tell a Bitcoin miner to turn offline is saying, so as of today, like the break-even point for an S19 miner is about $250. The break-even point for an S9 miner is like $80, right? And so if the price came out in real time and it was $120, the S9 miner says, too rich for my blood, I'm off, right? Because I'm not gonna, pay you more than what I'm gonna get in return. It doesn't make sense, right? Like it's like, you give me $10 and I give you something that's not beneficial, I give $5, right? Like it's not a value to you. But the S19 miner is going to stay online, right? Because it's still kind of economic for that miner to be online. If the price goes above 250, right, that miner's going to be like, okay, you can have this power too, because why would I consume something that costs more? So this example of energy side, where they're actually following an instruction from ERCOT and they have the price of energy that they have, and just on the energy side is that they're going to react and say this is above my costs.
Right. So ERCOT changes the price.
That's right.
As the demand changes.
That's right.
Yeah.
And price is to drive a behavior.
Yeah.
Right.
Okay. And so therefore the miners can't forward buy the energy for 2 years at a fixed price because they wouldn't be able to load balance them. That's the way the contract works.
You're interesting. You're injecting complexity here now.
Yeah, I know.
Right?
But I'm just saying it's like if I was the miner, I would want, if I've got to switch off, I might be able to switch off for a day or two. If I had to switch off, say, for a month, I'm losing money as a mine.
So remember like the hedge. So the example, like the miner that says, I'm going to buy a fixed price.
Yeah.
Right. And so this example where, the miner is online and all of a sudden the prices are above, my break even, I'm like, this is awesome, right? Because I'm actually getting paid the real time price. So here,
with my miner switched off.
That's right.
Huh.
Right. I saw the light bulb, man.
Well,
that's good.
Close.
Yeah.
I'm close. I think what's going to happen is we're going to have a little chat afterwards and I'm going to be like, do I fully get this? But I think I do. Look, it's fascinating. Do you see a scenario where the grid itself may choose to start mining, or there's a merger between the generation companies and miners, or miners become generators, or generators become miners, or even the suppliers, I have Shell, say in the UK, so I buy my energy off, they also become miners. Like, where do you see this going? Because we've seen it in that some exchanges, Bitcoin exchanges, are starting to look like banks. And some banks are looking like they might start becoming Bitcoin exchanges. Do you see anything happening between miners and the energy market?
There was news today of Exxon mining.
Okay. What's that? Can you show us?
Yeah, let me pull it up.
Danny might already have an answer for us on this. All right, what's this? So for people listening, ExxonMobil is taking gas to Bitcoin pilot to 4 countries. Okay, ExxonMobil Corp is running a pilot program using excess natural gas that otherwise be burned off from North Dakota oil wells. Oh, this is flaring. Yeah. To power cryptocurrency. No, to power Bitcoin mining operations, and is considered doing the same at other sites around the globe, according to people familiar with the matter. The oil giant has an agreement with Crusoe Energy Systems, Inc. to take gas from an oil well pad in the Bakken Shale Basin to power mobile generators used to run Bitcoin mining servers on the site, said the people who asked not to be named because the information isn't public. The pilot project, which launched in January 2021 and expanded in July, uses up to 18 million, yada, yada, blah, blah, blah. Anything else interesting there, Dan?
I think you've basically got the most.
Yeah. We continue. Look, keep going. We continuously evaluate emerging technologies aimed at reducing flaring volumes across our operation. Exxon expects to meet the World Bank's call to end routine flaring by 2030. So that are they actually doing the mining themselves? They're not, are they? Doesn't look like it. But the point being is, they're seeing this now, and that's Exxon, who in the 1970s, their scientists realized that putting carbon in the atmosphere would increase the temperature of the Earth. Thank you, Nathaniel Rich. I pissed a few people off there. But so back to my question: do you see any of these mergers?
Yes, right, and it's kind of like, and people are realizing that like Bitcoin mining is energy, right?
Yeah.
Like it's all energy, right? And so like, so think about like you run a power generation company, right? And the way it works for you, we talked about like you inject your power into the grid and you receive what they give you. No, you don't get to have any say in it. It's just whatever the price is, it is, right? So imagine all of a sudden this is for the first time ever, there's a second customer that will buy as much as you can produce, right? For whatever the volume, the right size fitting for you want, and pretend this is somebody coming to you, and you have a say in what the price is, right? So this is either I'm going to have somebody come to my site who's a miner, and I'm going to have an option, or I'm going to say I'm going to have mining on my site, and I'm going to choose. I'm going to say which customer is willing to give me more for my energy, right? And so I'll use an example of like in Ontario, which is where my Ontario, Canada is like that's where my focus area for in power trading. They have a lot of nuclear power, right? And so they've got, I think it's like 12 nuclear power plants. They've got a whole bunch of hydro and they've got a bunch of wind. And there's something that's called surplus baseload generation. And that's an announcement from the grid operator saying, we got way too much generation, that we don't have enough demand and export capacity, that we actually need to do something to fix this. And so what they do is they actually have the nuclear plants ramp down for like 6 hours. And so nukes don't ramp. They're not designed to ramp, right? And so they had to kind of come up with a process to essentially take some nukes offline, ramp them down slowly, and then keep them at the same, and they ramp them back up. Now, imagine there's an option that says, and there's two benefits on this one, saying, I'm a nuclear power plant, and instead of dispatching down, and there could be some payments that they're getting on Ontario that don't show up, but pretend that the choice is $0 for ramping down. It's going to say, I'm going to put on, I'm an 800 megawatt nuclear power plant. I'm going to put on 400 megawatts of Bitcoin mining, right? And then the scenario, instead of ramping down, you say, well, I'm just going to, push my power to this mining facility. And so now what you've done is you just create like a second customer that you weren't just kind of forced to say, whatever the grid's going to take, you're going to take. And there's a second part is that, so we talked about what types of resources are flexible. And so flexibility is usually from like fossil fuels for dispatching up and down. But you can put on this Bitcoin miner attached to your nuclear facility, and you can send it power. And so since your Bitcoin mining site can be dialed up and dialed down for kind of how it's dispatched, you've just kind of put like a supercharger on your nuclear plant that you can now actually provide flexibility to the grid, because you have the ability to ramp your nuke through the Bitcoin mining.